Okay, welcome to this session of Investors Hangout, brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. I'm Rachel from Value Research, and with me is our CEO, Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
Yeah. All right. So, with the nation under lockdown, we have kind of been unable to shoot our regular episodes. And in the meanwhile, the markets have been falling like never before. And many of you have been getting quite worried about your investments and have been sending in your questions. So, in this short episode, we'll be answering some of your questions. Now, Dhirendra, these are tough times, and the market crisis is only one part of the whole thing. But for investors, it is quite understandably a source of great anxiety for them. So before we get into their questions, would you quickly sum up the current crisis and also, talk about how it's quite different and quite similar to the ones we've witnessed in the past?
One is that it is similar in the sense that market has witnessed a kind of free fall, which we have seen before.
Mm-hmm.
But I think this turned out to be the most accelerated free fall in the shortest possible period. We have seen lingering period of falling markets.
Mm-hmm.
And the other unusual thing, of course, which by now most of our listeners and readers know, that this is something which did not originate in the market. All the previous crises, whether it be 2008 or whether it be 2002, the dot-com bubble, the technology crisis, or early, long ago, it was actually rooted in some scandal in the stock market,
Right.
some scandal in the financial market, some misbehavior in the financial market, and governments could do something in a limited way. It did not affect people at large. Here is something which has affected humanity at large and has come to the market. And now we see economies, businesses coming to a standstill. And it's a complete reprioritization of things. What is happening and what all is not happening. And a lot of businesses depend on something which we can do, which we are doing without using their services, products, or experiencing those things.
Right.
So this is very unusual, and it is unprecedented. I don't think we should be trying to take cue from anything that has happened in the past for this crisis. And the biggest question which everybody is asking is that how permanent or how temporary is this? The fact is that nobody has the answer.
All right. So I guess we'll now move on to the questions from our viewers. All right. So the first one comes in from Santosh Prabhu. And he says, in the current situation, if I want to start an SIP in an international fund for diversification for a horizon of 8 to 10 years, maybe longer, should I be investing in US funds or China funds?
One is that, in this kind of market or any market, one should diversify. That's the reason why you invest in a mutual fund. You should invest in an international fund simply because that's the right approach of diversification. The reason why you invest in a mutual fund is the reason why you should invest in a couple of mutual funds, so that you are able to spread your risk across different fund managers and in different geographies too. Now, this is if one has to invest in a US, all the kind of avenues available to Indian investors to invest in the US market, I find them to be really geographically diversified, more diversified. China, I would look at it as more like an international sector fund or a narrowly focused thing, simply because, the one, we don't know much about them. I find the US, all the investment avenues, Indian investors have 6-7 funds which are available, including the NASDAQ 100 ETF. I find them to be very well, geographically well diversified. They're actually the underlying businesses are globally diversified.
Right.
But if you are getting attracted to this fund, it may not be a good idea. If you are getting attracted to these funds because of late they have done little better or they have fallen little less than the Indian funds, don't that should not be the catalyst. That should not be the trigger for your thinking. Simply because we have seen the rupee depreciation. So effectively you gave your 74 rupees, and now if you take it back, it becomes 77 or 78.
Right.
This gain can actually disappear, or this can vaporize. So, and that is translating into superior performance for these funds. That should not be the trigger. You should invest simply because one should diversify. It's a core principle of investing, and those funds turn out to be superior vehicles of diversification.
And in the current context, it isn't as though the US funds haven't fallen as well, right? Because even the NASDAQ fell and I mean, it's
They did
recovered in the
fall,
past
but
few weeks. Yeah.
yes, they have fallen as well,
Mhm.
but they haven't fallen as freely as the Indian for the Indian investor, simply because the rupee depreciation has actually reduced the losses. Has actually cushioned that,
All
but
right.
you can't take that for granted.
All right. So, and are the stimulus packages likely to help in this?
I really wonder, because
Okay.
we are still in the middle of the crisis.
All
It's
right.
still underway,
Okay.
and I think it will take time. There are three possible scenarios. One is that it takes very long for it. The most pessimistic scenario.
All right.
It takes very long for it to get back to regain our normalcy, and in the process, a
Mm-hmm.
lot of businesses will die. A lot of businesses will be bankrupt.
All
A lot
right.
of businesses will benefit,
Mm-hmm.
and some of the strong businesses will actually come up with larger market share, superior management, and uh, they will actually look good.
Right. Right.
There are businesses which will first, the best case scenario is that in 2-3 months time we are
Mm-hmm.
back to normal. Things look, we look at it as a bad memory. In that case, we may not face that kind of corporate mortality, but I think it will still have a lingering effect in the way people think, the way people approach risk, the way people experience risk. And in that sense, I think it is going to be uh, the most optimistic scenario is also something which is not factoring in one thing, that businesses don't switch off and on like we switch on our TV, or we switch on
Mm-hmm. Yeah.
our fan. uh, Businesses, one, disrupted, or being stopped.
Mm-hmm.
A lot of variables has to fall in place. I think it will, even kick starting and making a full cycle, assuming that the virus crisis is out of our way, will also take much longer. So the pessimistic scenario, the optimistic scenario, all that actually points to a fact that things will be grim. We are not going to be out of this crisis, or the financial crisis following this, very soon.
Mm-hmm.
So keep that in mind. If a lot of people are trying to perfectly time the market, that okay, it has fallen so much, how much can it fall? We don't know. It may not fall further, but it can actually may not go up for a long time.
Right. All right. So we move on to the next question. This one's come from Pradeep Garg, and he says, in the current scenario, which type of debt fund would be safe to invest in if my investment horizon is 12 to 18 months?
12 to 18 months, I think one should not look beyond ultra short-term bond fund and liquid fund, because any kind of risk, of course, there is a possibility that some exotic categories, or the funds which will be assuming some risk, because one thing is given: we have already seen the first round of the rate cut, and it can further accelerate. But don't try to optimize your return on fixed income investments, simply because it's just not worth it. uh, we are not out of the credit crisis that we were in the middle of. We may the worst might be behind us, but for investors, to choose a fund which is completely insulated from such risk,
Mm-hmm.
and it may not be worth the anxiety. If you don't have time, if you have this kind of time, and individual fixed income investors are risk averse by the fact that they are choosing fixed income investment, uh, look no further than ultra short term bond fund and liquid fund.
All right. And in the current crisis, these don't pose a similar risk like the equity funds do, because they too fell, right, after
Yeah,
the
we have.
crisis. So,
Yeah, for the first time, we have witnessed that, in a fairly routine way,
mm-hmm.
liquid fund also declined in value. But
Mm-hmm.
the decline in value was not of a kind which investors will be very upset with or disappointed with. The risk, the scale of risk was nothing as compared to what we have seen in the devastation that we have seen in equity.
Mm-hmm. Right.
So there is risk, and you are trying to optimize return,
Mm-hmm.
and optimizing return without assuming significant risk. Yes, there is risk, and it's the last 4 months is a grim reminder that what is being said as the statutory risk for mutual fund, that they are subject to market risk, it has we have been reminded time and again.
Right. All right, so we're just going to take one last question in this session. Now, this one's from Anand, and he says, I have invested in equity funds which are facing losses now. I know the loss is only on paper, As there's grim news about the world and the Indian economy and its future, is it advisable to switch the existing fund values to liquid funds or safe bond funds now? As markets are falling on a daily basis, I do not want further erosion to my mutual fund portfolio. Kindly advise. I think the answer would be similar to what you just responded in the last question. Should
Yes,
I?
but I would like, I would like to just remind of all the kind of his context,
Mhm.
which should guide his decision.
Right.
One is that if you are investing, you are unlikely to need your investment for many years.
Mhm.
Then don't do that, because the biggest fault, to my understanding, has already happened. And trying to perfectly time it, it's nearly impossible to do that. So I would say that if your investment is long term, I would define it as 5 years and more, then don't do anything. uh, and if the other thing is that if you're likely to need this money in 2 years time, 3 years time, then by all means take your money out. Your investment is down in value, but whatever is left, you'll be able to protect that. What Anand is trying to do is trying to time his investment, take his money out and get back in at the appropriate time. If you do not have time, if you are likely to need this money anytime between 1 to 3 few years time, then take your money out. You will be able to protect the value of your money substantially, whatever is left. But if this money for was slotted as, if this is an investment which you are unlikely to need for many years, at least 5 years, then don't try to do that. Markets make the biggest move when you least expect it, and that we have seen the downside when we did not expect it, and the markets will also recover when we will be, it will happen in a fairly unexpected manner. So very difficult to do. I can tell you from my own experience in the last 25-30 years, biggest turnaround happened in in a very brief period. So that should be the guiding force.
All right. So what if his investment has fallen by 40% and he still needs it in 2 or 3 years? Should he still take it out now, or should he just try to hold on somehow until the markets recover?
Yes, he should, the money which he is likely to need, that much amount, he should take it out and, put it in fixed income, because
Okay.
it's important. We keep telling people about, doing their SIP.
Mhm.
It's also important that you take part of, a part of your money gradually, well before you need it.
Mhm.
And this crisis has actually reminded us that we should be a little more conservative when it comes to when you are likely to, because that is something which is absolutely in your control. You very well know when you need the money.
Right.
You very well, reasonably know for how long you are unlikely to need that money, and rest of the things we just don't know. So, follow what you know based on what you know.
All right. Thanks, Dhiren. So for
Thank
the,
you.
yeah. So thank you so much for watching, and do continue to send in your questions, and we will be responding to them on a regular basis. Goodbye for now.